Hi guys, this is Annie from iTradePrice.com. Hope you guys are having a fabulous and a wonderful Thanksgiving holiday, and you guys are getting to spend time with your families and your loved ones and eating tons of food. So once you get stuffed with food and have a little bit of time to relax on the couch, here's a little video that we wanted to make on price action. In this tutorial, we have gone through some questions that you can quickly ask yourself when you're reading a chart. This systematic approach is a good way to understand price action for, we believe, as beginners as well. It will get you in that mindset. Now, as you go through this information, keep in mind that these are not entry or exit points that we are discussing here. These questions or observations will help you with your market analysis, and when you combine all these multiple observations about the price, you will form the basis for any potential trades that you may consider on any given day. So the first number one that I would be discussing is the length of top and bottom wicks or shadows. So like always, we look at examples from real charts to understand these concepts. Now here I will be showing you the Tesla 2-minute chart from this last Friday. Let me open it up a little bit. Yes. So you can see here is the first instance of the bottom wick. Now that is a sign of buying pressure. At this time, we do not know if that point, the buying pressure, will persist. So, but however, when you keep on moving along with this stock, after a few minutes, there are few more instances of bullish pressure as shown by the lower shadows right here. And there are consecutive bars with bottom wicks that shows that buyers do have some strength here. And of course, the opposite would be true for the bearish scenarios where you have the top wicks and you see those selling pressure coming along. Number two, is it a trend bar? Now, the definition of a trend bar is that the body of a price bar or candlestick takes up at least 50% of the entire range of the bar. In short, there is where all the action is. If you do not have trend bars, essentially the price would be somewhat in consolidation stage, right? So now we will quickly look at Tesla, and this time I will be pulling out the 30-minute chart here to show you an example of bullish trend bars. Now you see on this 30-minute chart, we see no follow-through to any bearish trend bars. This shows how paying attention to the specific bar composition would help you to form an opinion about the market phase. Is it a breakout or a range-bound market? Is it trending or not? So it will give you that direction of a stock where it's heading up to. Number three, degree of overlap with the previous bar. You can say that this observation will show you how much strength or power a price bar has. Now, if the price bar you are looking at overlaps all the way with the previous bar, that means that the market is, just sideways, essentially. Inside bars are an example of that. On the other hand, if there is a minimal overlap, that would mean that market participants are in a hurry. And again, looking at Tesla, that has been a good example of that in the past few sessions. More overlap equals congestion, and no overlap means trending market. Number four, observing consecutive bars. It's a very simple concept. Consecutive bars closing in the same direction means that there is conviction in the move, right? So here I would be sharing an example of Tesla again with you, and here is a 10-minute chart. You can see on Friday we have more green consecutive bars than the bearish red ones, right? So this would just help you identify the momentum and what exactly is going on. That does not necessarily mean that you must trade in the direction of this momentum. Now, for example, let me pull out the Zoom chart here. Now, for example, Zoom, after the initial move up on this last Friday, we kept on looking for dip buys at support level. There were more consecutive bearish bars in the lower time frame, but I was using the support levels and other price action based observations to time the bounce trades. Number 5, response to gap opens, if any. Gaps are a part of trading, and we see that quite often, right? So basically, gaps are the difference in price from where it closed the prior day and where it opens at any current day. And of course, you will observe these on a daily chart view when you are viewing the stock on a daily time frame. You are looking for charts or price behavior where the bars opened with a bullish gap up but closed bearish, right? Or price bars with a bearish gap down open but had a bullish close. The reason is that the gaps in the morning set some sort of an expectation. But when you do not really see any follow through to those gaps, that means that those expectations did not really come true. Again, let us look at an example of Zoom again. And this is the chart from November 16th that we are focusing on right now. So it opened with a gap down, but those expectations were not met as market decided to fill the gap and go in the opposite direction, right, of the gap, right? So that means that the bias became bullish. Look for the setups that are bullish then. I think that day UC's morning commentary was in those lines where he was looking for a bounce based on Zoom trying to fill the gap. So the plan was to let the price fall, but if it decides to come back up, we are getting long. So the price to get long was at around 385, and that is what was shared in the morning, and that is how you just plan and react to the already set levels. Number 6, how does the price react to an important key level? In other words, what does it do when it reaches support or resistance level? Now, first of all, I'm not going to discuss how to create or come up with these support resistance levels. This all has been discussed in detail in my trading course and UC's trading course, and we have gone thoroughly around all those things in that. UC already provides you with those levels each morning before market open. But if you ever get interested in identifying these levels yourself for whatever reason, maybe you want to come up with these price levels on stock that we don't normally trade or follow, or if you want to just learn how to do it in a consistent manner with some structure and some methodology, so kindly check out our price action course that we have created. It is also included in one of the Thanksgiving bundles that we are offering, and it has good price reductions on those as well. But coming back to the topic, the concept is very simple. You must pay attention to the price bars that test these support and resistance levels. You may also observe that the price just slices through that key area, or it can be rejected. Whatever the case may be, it will help you with your trading approach for sure. For example, Apple touched the daily support level and it formed a nice bullish looking bar with a bottom wick right here. So that means it's a good level to pay attention to in the future. Number 7, our final one. What do the last 3 to 5 bars tell you? Now, okay. Now, the point here is to ask you to consider a broader price or bigger picture in your mind whenever you are analyzing a chart. What is the context and what kind of expectations are being set with the price bars you are seeing? And are those expectations being met? I will go back to the Zoom chart for this week. So UC's bigger time frame analysis or read was that Zoom overall in a higher time frame is bullish. That is the reason, and that is why instead of shorting, he kept on looking for bounce trades or breakout trades. Moreover, when you become proficient, you stop looking for rigid setups, but you analyze chart in terms of what are expectations and constantly re-evaluating them to enter and exit your trades. For example, Zoom had a nice bullish trend bar from last Friday that closed above the recent resistance levels. The volume was also good. Monday was an inside bar, and then on Tuesday with a gap down, we did not see any bearish follow through to that, right? So instead we saw an attempt by the bulls to take the price back up. So that was more bullish than bearish, right? Wednesday we open gap up, and then we see the price, it remains elevated. So look for bullish setups in that case scenario. Look for pullback entries to go long. Once you get enough practice looking at the charts and you have your focus list of names that you want to stick to day in and day out, your perspective towards trading will change. You will become more confident and you will trade emotionless, which is very important when you are trading. And that is what you should aim for as a price action based trader. So all these information are listed in our trading course that we just mentioned, that we have emailed our members also, and other people who are interested in getting the price action course. And it comes along with the one-on-one session, which would elaborate on how to make these levels and how to work around with these levels, because they would help you become a good, proficient price action trader. Thank you for your time, and hope you guys were able to learn a thing or two today from all this information that we passed on, and it will help you become a successful independent trader. And happy Thanksgiving once again. I think I had a lot of turkey today. So you guys have a fabulous rest of the weekend, and we'll see you guys on Monday. Take care. Bye.